Hello, everybody. Welcome to the Fintech Combine. I am your host, Kris Kovacs, and this is the series where we talk with and sometimes about community-based institutions, their digital and business transformation projects, and we meet the innovators, entrepreneurs, and fintechs that make it all possible. Welcome to episode number 2 of our series, Powered by Curql. Curql is the investment fund created by credit unions that has now made more than 40 investments in fintech startups, bringing the very best applications to the credit union marketplace. They provide both investment to the fintechs, but they also bridge the gap and help them start to acquire customers inside the credit union space. For more information about Curql, visit Curql, Curql.com. On this episode, we're speaking with Shawn Melamed, the co-founder and CEO of Spiral, about how his firm is building heart-centered digital experiences for credit unions and community banks. So if you're ready, let's suit up and get out on the field. Shawn, I'm very excited to have you on the show today. Why don't you tell our listeners a little bit about yourself and about your company, Spiral?
Sure. About myself, I guess I'm an entrepreneur. That's obvious. I grew up in Israel. I started developing software since I was 9 years old, and now it doesn't sound that impressive because I think everybody with like ChatGPT, like my 5-year-old, can develop software. When I was a kid, it was a big deal. But I built computer games as a kid, and that was my outlet for creativity, probably. And then I started my first company when I was 26, and really stumbled into financial services. I built a software that enabled to monitor transactions, and the people really liked buying my products were banks, broker dealers, and stock exchanges. So I found myself in the middle of selling to the largest financial institutions, and ran that company for about 7 years, sold it 2012, then was involved in another company that was also in the space of electronic trading and selling to banks. And we sold that in 2014. And then I had a detour in my career. I guess I had to feel how it feels to be part of a bank. So I joined Morgan Stanley, and I had this really cool job, which is really partnering with any kind of company. It could be very large companies like Dell and Michael Dell, and could be the most exciting emerging fintech startup. So my goal was to try and disrupt a large bank from within. We're a $200 billion bank, multiple business divisions. And so I done that, and then they liked what I was doing. So they asked me to launch the innovation office at Morgan Stanley. So that was an interesting thing to do as well, because it was, how do you disrupt a very large financial institution from within and convince people that being innovative is something that should be rewarded, not necessarily have the right makeup of people. It's a very interesting challenge. So I've done that for about 5 years. Then I turned 40. I had a midlife crisis. I got a sports car. I got divorced, and I wanted to start my third company. But really, the story is that I felt that being at the juncture of money, where you're a financial institution, you have the ability to influence people's lives and help them. And if you create the right financial institution that is heart-centered, you can help people build better financial life for themselves through guidance, through helping them save. And then if they have some savings, can also donate and elevate their communities through charitable giving. And that was the genesis of Spiral.
So there is so much in your background I want to dig into, but we'll start with Spiral and maybe work our way backwards. Okay.
Yeah.
So Spiral, how does Spiral help consumers connect with their money and provide them guidance and give them the ability to give back to their communities?
Yeah, so basically what Spiral does, it takes traditional financial institutions that historically had the same type of accounts, the same checking account, savings account, um, and completely transformed them into this deposit growth and retention platform from their side. And the way we do it is through creating these personalized experiences that really invite the member to use those solutions. So, for example, on the checking account side, we have a solution that called the Roundups Center that enabled with every swipe for the person to save money, or
Mhm.
if they want to donate a portion of their roundup, they can donate towards a meal to child in need or donate towards a night of safe shelter to somebody. On the saving side, for example, we have a savings center that differentiates savings accounts. Could enable people to define goals that they want to save to, for example, a new home, a new car, and create gamified and automatic way to save money towards that goal. For example, every time I get my paycheck, automatically move 2% towards my down payment goal before I start spending that money. So in a nutshell, we built this platform that really enable to learn about the individual, kind of
Mhm.
their personality, what they care about, and then give them the tools that enable them to achieve their dreams. And if they have a little bit, give back to the community.
That's wonderful. How does it integrate with existing online and mobile banking solutions?
Yeah, so as we know, financial institutions, the vast majority of them has a pre-existing technology stack. So whether it's Q2 or Jack Henry or
Mhm.
Alchemy or Luminar, any of those guys, or Candescent. So we built our solution to be completely embedded and white labeled. So the moment somebody log into, let's say they have an Alchemy experience, right? Their bank or their credit unions use an Alchemy experience. Spiral comes up, it's embedded inside the experience. You don't see really that Spiral exists. You just see new capabilities of Roundup, new capabilities of a savings center. So the benefit for the financial institution is that it's completely turnkey.
Mm.
We don't require development or anything like that. And the benefit from a timeline perspective, it's just a very quick implementation, go live.
So there's nothing the institution has to do in order to participate.
Right. There's some minimalistic thing that from a project management perspective, you have to do a kickoff, define the scope, do some employee
Sure.
testing, stuff like that, but nothing in terms of like development or anything like that.
Oh, that's excellent. That's excellent. How long does it typically take for an institution who's using one of these partner platforms to be able to start using Spiral?
Yeah, I would say depends on the platform and depends on the level of urgency of the financial institutions.
Mhm.
We've seen as fast as 35 days. That's probably our record
Wow.
from signing a contract to being live. To things that they take multi-month. I think our average then about 92 days to some platforms, 120 days. But that's being live in front of all of your members.
What has your experience been for the adoption of those services once a member or once a credit union goes live?
Yeah, it's been excellent. So the way we measure is how many people are actually enrolled. And
Mhm.
typically we'll see within the first 6 months, anywhere from 5% to could be 15% of the members would get enrolled and start saving money on a daily basis, which
Mhm.
is in the world of banking is a very high adoption.
It is. Is there a typical demographic that your services appeal to?
Yeah, it's interesting. So when we look at the people using our services, it's anywhere from a 16-year-old to an 80-year-old.
Mhm.
But I would say, especially as community financial institutions age group turn to bias older,
Mhm.
kind of in the average of 53, we see about half of the people using our product are the younger demographics, kind of the millennial Gen Z, people younger than 44, which is proportionally higher than the normal distribution those FIs have.
It is. Do your institutions go about a particular advertising campaign? Do they use these enhanced services to be able to attract new members and new online users?
Absolutely. I mean, one of the unique thing about our solution is that it enables you to completely customize the program to fit your mission as well as the local
Mhm.
community. So, for example, our Roundup Center and our Giving Center are designed for the FI to choose local nonprofits that are important in their community. So it could be that with every swipe, I want to donate a book to somebody because the credit union is focusing on education, right? Or it could be that they want to help a veteran because they focus on helping veterans. So a lot of them would use the charitable giving aspect to completely customize the experience, and even if it's just a roundup, it would have some implications to what happens if I buy food in our local community. So when they market it, we give them also a lot of marketing assets to actually market it to their members. But it could be anything from, you swipe your card, save some money, you swipe your card, help our community. They are running specific fundraisers that could be thematic. So, for example, we had International Women's Day yesterday, I think, right? Or 2 days ago.
The 8th, March 8th?
Yeah. Yes, 2 days ago. Yep. So we had some financial institutions run fundraisers for single moms, right? So now you create awareness that I, as the financial institution, really cares about a big part of our, 50% of the population is divorced kind of thing, So I care about a large part of my constituents, the people that I'm serving. And there's endless experiences like that because you have endless amount of awareness days throughout the years, whether it's veterans, MLK Day. So they're using it in different aspects to connect to different type of communities.
So the institution's able to select and say, "Hey, we focus on food scarcity, so we're gonna make the local food bank an option for you to be able to make your charitable gift to."
Yes, exactly.
Very cool. So what was your inspiration for Spiral? I mean, you had this amazing career building companies, building an innovation office at one of the largest banks in the world, and you decided, you know what, I'm going to get back on this horse again and go. What was it that made you start Spiral?
It is a head scratcher, isn't it? Like, as an entrepreneur,
I'm sure at times it feels like it's a head scratcher. Anytime you go back into the crucible, right?
Well, my kids, it's kind of funny because my kids really like the time I was at Morgan Stanley because I was more relaxed. I was more available. We go on a lot of vacations together. And when you're an entrepreneur, it's kind of like the inverse. It's like you're all in on this mission. So for sure, it's a great question. I think for me, and I wasn't joking about this like midlife crisis. I think something interesting happened in this kind of 35 to 45, and some people it happens sooner, some people later. But for me, it was like, man, I spent so much time in financial services, and I built companies that really helped large institutions, whether it's traders, broker dealers, stock exchanges, make more money and become more efficient as a market. I felt inside of me of I do want to do something that really helped the average person. And maybe it was the fact, I have young kids and I was kind of teaching them a little bit of financial literacy and what that means. But that was a big part of it. The second part is as I was trying to get more involved in my own local community, and I had a friend that really was part of he was a homeless when he was a kid, and he over the years became a successful professional, and he started giving back. And every time he would go back to one of the homeless shelters, he kind of posted on social media, like, I'm going to this place, anybody want to join me? So me and my partner Nika, we would go with him and help him out. And every time he posted more pictures of the things that we're doing, and more people join into that. So what I started seeing firsthand is kind of this upward spiral, and that's kind of where the name came from, where if you help somebody get out of that cycle, right, of poverty, for example, and then you can help them do good in an easy way, and in a way that is also almost like marketable, gamified, so people could actually see and feel, and it's tangible how giving back works. world could be better. So the combination of the two things of like, okay, I want to do something to help people build better financial life for themselves, and then seeing that firsthand how that works, that's kind of the two things that linked in my brain of like, okay, let's do this. Time for round 3.
It's, as you said that, it occurred to me that in my mind, spiral is a negative, which is completely wrong, right? And you're proving it. But I think of spiral, and you think of like being out of control and spiraling down. But what you're talking about is building from the ground up and creating that upward spiral,
Yep.
right? And that requires assistance, that requires the help that you're not just willing to give personally, but as your company, you're empowering credit unions to be able to do that as well. That's a good mind shift, just in the use case of a word. Still, though, right?
Mhm.
I understand that. I understand the desire to do something to help your community, right? But you said the way to do that is through, creating this digital service, providing it not to the big banks, right? But instead going back and working through community institutions. Tell me a little bit about your business model. So you're focused on credit unions and community institutions, or just credit unions at this point?
Credit union and community financial institutions, not limited to just credit unions.
Okay. And
Um,
how many institutions are live on the platform today?
so we have about 45 banks and credit unions that are our customers.
That's a very strong number.
Um, yeah, and it's split down the middle, frankly, between credit unions and banks. I
Mm-hmm.
would say when we started, it was predominantly banks, and I kind of discovered the credit union space thanks to Curql,
Mm-hmm.
and a great program we were part of, their Accelerator. And
Mm-hmm.
since then, just the proportionate amount of credit unions that signed with us significantly higher.
Yeah.
And it was interesting because when I started the company, especially coming from a large bank, I wasn't as familiar with the credit union space and the fact that
Right.
it's essentially heart-centered people building a heart-centered financial institution for people, and hence our logo came from that, like being a heart center with a spiral.
Yep.
So it definitely a very very healthy grounds for us. Credit union is a great partnership because we go after the same mission of helping the individual. And yeah,
It definitely connects to the mission of credit unions too, right? Helping their communities, building individuals up. You mentioned Curql. Talk to me a little bit about your involvement with Curql. How did you find them? How did you get involved with their accelerator, and what that's done for the company?
yeah. I think I met Curql for the first time in 20. Well, actually, let's rewind a little bit, okay?
Okay.
Because I think it's important. So when I started the company back in 2020 with the same mission, I started it as a neobank. So we started as a direct to consumer. As a direct to consumer bank, and we grew very quickly to close to 70,000 members in about 9 months. But very quickly we realized, hey, we're competing with a lot of financial institutions that essentially are doing the same things. So we decided, instead of like competing for no good reason, why don't we empower them with the tools we have? Because we saw we had great adoption and great utilization by the members. So as we were making that change to our business, I think that was kind of the time frame I first met Curql. And I want to say it was kind of like late 2023 or something like that. And say, hey, we have this, this accelerator thing we're doing. We'd love to have you. And that's kind of how we got to know the institution. What was so compelling is the fact that they have 150 of kind of the largest credit unions in the country, and that program, which was about 12 weeks program, they took us through different, I think it was 3 large credit unions. And we immersed ourselves there for about a week each. And you learn how they think about the business. You learn how they think about their communities, how they think about using partners and vendors. And that was super insightful. I think from that point on, that's where I said, very quickly things accelerated for us in the credit union space.
Talk to me about starting as a neobank and
Mm-hmm.
what are the unique challenges? Because there's a lot of entrepreneurs out there who think about starting a bank, right? I've got a new way of doing it. I've got a neat twist on an idea. We talk to folks all the time. Talk to me about what the challenges of starting with that neobank model are and ultimately why you abandoned it.
Yeah, I think there is a preconceived notion that the banking system as a whole, and its generalization, obviously, it's kind of a bit archaic. These institutions been around for tens, some of them hundreds of years, as they like to publicize it, right? And they're slow moving. By the way, for a lot of good reasons, because highly regulated, and you get punished heavily if you move too fast and too risky, and you're actually handling people's life savings as well, right? So there's a good reason why that is. But for an outside entrepreneur, it seems like, oh my God, the rest of the world is changing so quickly. Amazon, Netflix, and how I see movies, Spotify, how I listen to music. Everything is so personalized, very cool, slick apps. Like, why my bank or credit union can look like that, right? So I think that was why as an entrepreneur you even look at this space and say, there's a huge potential here for innovation. And it's true. And I do think that the gap between existing experiences that appear elsewhere in your life, in any kind of retail experience, are moving much faster than financial services. Now, I do think that maybe because I started when we started the Neobank, it was 2020. I do think there was a massive change in the last 2-3 years where the pace of innovation of financial institution has been leveling up and matching what you could see as an individual fintech does on the outside. And I mean, I'm glad we're part of that revolution, right? Empowering credit unions. But going back to your question, yeah. So that's first of all, that's the reason and the urgency. Like, okay, let's try to do something like this. The difficulty of it, the easy part of it is actually is to build something. It's easy because you don't have any legacy infrastructure. You need one sponsor, financial institutions, one sponsor back in our case, that lending you their balance sheet, basically their deposits. I think and then like every good direct to consumer company, especially if you're a tech company, you learn how to acquire members. It's expensive. It's expensive to convince somebody to open a new bank account. It's expensive. It's even more expensive to try and convince them to leave their existing financial institution and switch to you. So the biggest challenging that you encounter as a neobank is like, okay, a lot of people are coming in, but what would make them choose you as a primary financial institution? And the reality is that you need to have a lot of things for somebody to look at you and say, this, I'm going to trust my, again, life savings and my paycheck to that financial institution. And it varies by age, but especially as you go older demographics, or people not even older, but just people that already start having things in their life, like they have an auto loan, they have they want to buy their first house, they need a credit card. You start getting into this like increasing level of table stakes capabilities that you need to have, which essentially requires a neobank to go and try to acquire all these capabilities, but they don't have the regulatory framework to do so. They're not a bank. They don't own their own balance sheet. So what happens is that you are lending balance sheet to create all kind of this one-off relationship for individual point products, whether you want to offer mortgages, you want to offer credit cards, and they are very expensive for the neobank because you are paying much higher than you would pay for an existing deposits that you're gathering.
Right.
So I just think that the neobank model as a whole is very suitable for maybe very small part of the demographic as either very young people or people with a low income only. And as they mature and looking for more things, you need to serve those things. And if you want to serve those things, you eventually have to become a regulated financial institution, just like SoFi did. And then we're no longer talking about neobanks. It's just another, kind of regional bank size wise. And
this should be great news for community institutions then, right? Because they can lean into innovative products like Spiral to improve the experiences for their members, but retain those kind of important pieces that make them large enough and sophisticated enough to support those bigger needs.
Yeah, absolutely. I think the good news is that the fintech innovation, when you look at neobanks and fintech apps like the Robinhoods of the world and Acorns, they enabled to experiment about like what people like, or even Spiral in our early days. We knew that people love this idea of combining, financial wellness and charitable giving. We validate. We spend a lot of money validating this for people, right? So fintech is great in that regard of like vetting out what is a good idea in the public. I think the good news is that now as a financial institution, you need to evolve into the 21st century. And a lot of these financial institutions historically just had products that were, the same product we had in the 80s and 90s. It would be like same checking account, the same savings accounts, it kind of looked the same benefits. And in today's day and age, because of the digital innovation, because of companies like ourselves, you can offer all these different capabilities that keep your member captivated by you as the credit union, as a primary financial institution, and they don't need to go and venture out to try, point off solutions if you can satisfy that to a good degree. I think the average person don't like dispersing their finances to, 16 different apps. It happens because, there was no other alternative. But if we look at where things likely going to end up is, you're going to stay with your bank and they're going to be your one-stop shop for your financial needs. And that's great. Kind of like it was in the 80s or 90s,
Right.
Somebody wanted some investment advice. You brought like an investment advisor to be part of the credit union, and you try to keep the relationship there.
So there's a lot of credit unions I see today who are creating chief innovation officers, right? Or chief transformation officers who are trying to replicate some of what you were talking about in this, like kind of the innovation office, right? What advice would you give them for being able to experiment like you were talking about and being able to try out some of these new ways of engaging their members?
Yeah, I would map out the things that you need in order to retain and grow deposits, right? And I would look at it as kind of full funnel and say, I need to have an account that has attractive enough capabilities. So, I would add some capabilities that help me differentiate my account. Right. I think every credit union has something unique about them on how they were created or the region they're operating in. So highlighting those differentiators is probably going to help you win against the national competition from the Chases of the world, more so than trying to beat them to the T on a specific feature per se. So like some of the things that we're doing with highlighting the local nonprofit, highlighting the mission, is enabled you to tell your narrative differently. The third thing is personalization. So I think that what people are looking for these days is, I want to customize how I order my Starbucks, and I like one scoop of matcha, I want oat milk, I want all of that stuff. So making sure that the features you're adding could actually target the wider set of demographics you have. So whether it's a younger person that cares a lot about X, or an 80-year-old that cares about Y. For example, in our example, our savings center, you create all these gamified way of saving towards your life goals, right? But we can detect if somebody is under the age of 18. The things they care about is very different than, the 25-year-old they're building maybe their, first family or buying a first home. So they care about, under 18. I just want to maybe save for my first car, or maybe I want to save for my next PlayStation, right? And that's where personalization matters a lot, and that's kind of one of the big foundation of how we built all of our products.
So the idea being that if it's meaningful to them, instead of just saving, right? This is kind of the psychology of savings, right?
Yeah.
Making it meaningful, making it personal for them is different than just saying, you know what, son, you should save more.
Yeah, exactly. Well, exactly. What do you like? So personalization would be, in our example, what do you want to save for? So let's say I want to save for my first home. Like, great. Shawn, by when do you want to save for that? Let's say in 4 years. Okay, great. Let's help you get there. And then we have, in our case, this thing called auto savings. You can add auto saving rules that fit your lifestyle. For example, every time I purchase something, maybe I want to tip myself 5%. So it would go to my savings instead of tipping the waiter, please tip the waiter, but like another 5% on top, right? So that could fit one person lifestyle. Another one is the example I gave earlier, like the moment I get my paycheck, automatically move 2% of my down payment before I start spending it. That would fit another person lifestyle. So we give all these different variety of ways that you can weave into your lifestyle and enable you to save towards those things. So I understand what you care about. I'm giving you a tangible way of getting there, right? That's personalization.
Is there a generational difference in how people save? Like I could foresee, for example, traditionally someone saying, I get a paycheck, I take a certain percentage, I pay myself first. We've all heard that, right? But I could see where young people are like, hey, let's tack on 2% and slide it over. Like, is there a generational difference in how your tools are used?
Yeah, I would say that probably younger demographics are more open to creative ways of doing things. For example, I'll give an example with a Roundups solution. Credit Union of Texas, who's a great partner of ours, use our Roundup, and they have this great incentive that says, round up $240 every year, we'll give you $120 bonus. So if I'm a young person, Roundup is maybe my first way of them thinking I can actually save some money. And $300 when you look at the combined thing is a significant amount to save. So that's a good example, I think, of creativity that plays for every age, but especially when you look at Roundup and people starting to save, that gives them all this kind of gamification there.
You could see that, someone who maybe is too young or their income isn't large enough or they don't have access to a 401k. It almost sounds like a 401k, right? Where you say, hey, you contribute this and we'll contribute this on top of it. That's a great way to do it.
Yeah, I like that analogy for sure.
Is there something different about building fintech for credit unions? So when you made the move from neobank to banks and then banks to credit unions, how did your product evolve as you went through those transitions?
Well, the biggest transition is from a neobank to becoming a provider to financial institutions, right? Because essentially what you do is you take something that we controlled our own destiny and everything. We had a great marketing department. We had a great adoption, driving people towards adoption. And now when you work with selling your product to a financial institution, like a credit union, and they need to serve their members, you need to teach them a lot of things that as a neobank you did in your sleep, and it's actually was very effective. So I think one of the things that sets us apart in that regard is we took all of our best practices from when we were a neobank and we translated them into this massive library of assets that we help our credit union go to market with. And those are things that we've seen that we put in front of millions of people across the US and geographies, and we've seen work. So it could be anywhere from, this is an ad that has a great conversion when you're trying to acquire a new member, towards that's the best way to talk about Roundups in your local community. Here is a few examples for videos. Here are a few examples of of assets, to pop-ups and things you show when people log into their mobile banking that would nudge them towards trying the service.
Mm-hmm.
I think the transition from banks to credit unions, which was the second more minor transition in a way, was the emphasis. For us, it was less so because actually our products, both our Roundup Center and Giving Center, are so focused on the community that they just resonate better, I think, with credit unions because it's a big part of like you said, their mission. So for us, it was more keep emphasizing those areas and keep investing in those. For example, we had credit unions that have their own foundations, and they wanted a certain way of highlighting their own foundation, a certain way of highlighting the pillars of each foundation and what it does. For example, we worked with Giza Credit Union, and they launched their own Valor FI, which was a profession focused credit union. So imagine teachers and I think firefighters, nurses, and each one of them had a very different giving experience, a very different, like, hey, you use our debit card, every swipe would go towards a charity that focuses, let's say, on firefighters, if you're a fighter. So I think taking pieces of our product that were there already and keep emphasizing and evolving them, because we had willing partners in credit unions to kind of take that to deeper.
So this is your third startup, if I'm counting correctly. What did you as an entrepreneur do differently this time that you kind of learned the hard way previously?
I think starting from like the problem and actually understanding what problem you're solving for your customer in a deep way versus just the idea. I think a lot of like I was lucky in my first company that I started from a generalist idea, and I just stumbled into a willing customer that was willing to pay money for it, and then I adjusted the product accordingly. But I think here it was, okay, what is the big problem we're solving for? And I think the biggest problem we're solving in 2026, and this has been in the last few years, just people want to grow and retain deposits. So what are the things, kind of breaking it down to what does it mean, like why people are leaving or why people are using you only as secondary financial institutions, and how we can make it a primary, kind of through our Roundup Center, kind of through our Savings Center. So I think that, like, making sure I understand what the business problem we're solving first. Second thing is just the team. Like, I think as you grow older and you hire a lot of people, and I hired a lot of people in both my startups and also at Morgan Stanley, you kind of learn what works well with you as an entrepreneur and what works well in general, like what kind of personalities. And I'm very, very happy and feel fortunate with our culture and the people we have. It's kind of that combination of competent, motivated, passionate, compassionate, people. So it's and for our company, that's what we need, because we're a heart-centered company. So once you have that kind of commonality on the same, everybody rowing in the same direction from a mission perspective, they are as capable in each of their respective disciplines and passionate about what you do, you can create amazing things together.
Well, it sounds like you have definitely created something amazing, Shawn. Congratulations. If a credit union is interested in learning more about Spiral, how do they get a hold of you or your company?
Yeah, easiest, email me directly. We can help. It's Shawn, SHAWN, at spiral.us.
Awesome. Shawn, thank you very much for joining us today.
Yeah, of course. Thank you for hosting me.
Really great. Really great. That was a great episode. Shawn, thank you very much for joining us. And thank you to Curql for recommending and supporting Shawn on this journey, really bringing amazing experiences, heart-centered experiences to credit union members. If you like this episode, please like and subscribe on your platform of choice. We will see you next time.